It's a low volume holiday week, but the volume is coming back right around the corner. Is the stock market geared up to go higher, or is it getting ready to roll over? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. First things first, I am now running the 4th of July sale for bank trade alerts and the stocks channel Discord, and you can now claim 50% off either service or both simply by entering the coupon code FREEDOM. I think the month of July is going to be a great trading month, and I think we're absolutely going to crush this market, so now is the best time to consider joining Bank Trade Alerts or the Stocks Channel Discord server. Alright, so today I want to do a shortened episode focused on the indices because the month of July is going to heavily depend on whether or not we get an everything rally. So in SPY, we're already starting to break out, and we just need to see price holding above this level at 442. And then we should start climbing higher towards 448 up to about 453. Now don't forget we have this huge gap to fill to the downside right around 438, and I think there's a good chance we do fill that gap. So in the month of July, if we are going higher, it is possible we go lower to fill the gap before we go higher and put in another higher low above that support level right around 438, which is also the rising 20 daily moving average. Now, if we come down and fill that gap and we break down through it, then you're looking for support to hold right around 436. Otherwise, we are coming back down to retest the breakout right around 429. If we break 429, we're likely getting a deeper correction, and the next likely target will be the gap fill at 423. So in SPY, manage your risk right around 436, which is critical support, and the breakout of resistance at 442. Above 442, we're looking for the higher price right around 450, and below 442, we're looking for the gap fill at 438. Now pay attention, this is a very low volume week because it is a holiday week, so a lot of the price action this week is going to be very muted and very flat until we see that volume coming back into the market. So I do expect a lot of the fireworks to occur next week and not this week, because I just don't think we're going to have the high volume we need to get a big move in this market until we see people coming back from the holiday. So know these critical levels and start developing your trade plan now. Next up is the NASDAQ 100 triple Qs, which was flat for the day, which is exactly what I would expect to see in a holiday week, and we are sitting right at critical resistance, which is right around 372. Now on the triple Qs, we saw the big tech sector leading the way higher, and they are the sector that is most likely due for a correction. So watch that critical resistance at 372 and the gap fill to the downside just below 365. That gap fill of support is going to be very critical, because if we break below that gap, we're likely coming back down towards 355 or 347. That is likely where we'll have critical support, and I think there's a good chance we are still going lower to 355, but if we start breaking above 372, we instantly need to become more bullish, because above 372, we are likely going to continue this bull trend, which means we are likely going to start climbing towards the 390s. Now, I don't think we're going straight to the 390s just yet. I think we are going to see that correction first. So be very cautious. If we start to see selling and it's on high volume, we're looking for critical support to hold up right around 365. And then if we start breaking below that, we are instantly looking for a deeper correction down towards 355 to 347. So those are your critical levels in the triple Qs, and keep in mind big tech could have a lot more downside due to needing a correction. Even though we are still going to follow the price action in the chart, it is something you should be aware of. In the Dow Jones, we were down 0.37% today, closing right on top of the 5 EMA, and we have that gap to fill right around 341.39. The Dow Jones needs to break above 346 to continue this bull trend, and then we should start marching higher towards 353. Now, if we start to see all of the indices breaking out to higher highs, then we are likely continuing these bull trends and going to higher prices. But if we continue to see strong resistance around these double top looks, and on the Dow Jones that is right around 345, it is possible we do come all the way back down towards critical support. So in the Dow, if we break down below 341, we are looking for a trip all the way back down to 336. Jumping over to the Russell 2000 IWM ETF, we were down 1% today, and the critical resistance on the IWM ETF is right here at 188. And I made a video on why the small caps could be the next ETF getting ready to run, but that is going to require the price action breaking that resistance at 188. And then I am looking for a trip higher towards 195. So we're instantly more bullish if we break above 188, and we're likely in a trading range between 184 and 188 until we get a breakout. If we break out to the downside, we need to break down below 184, and then we're looking for a retest of the critical support at 180. And then quickly looking at the VIX, this is one of the main reasons I think we could be due for a correction, because the VIX is showing very low volatility down here below 15, but we have been coiling up between 13 and 15, and usually when the VIX starts to coil up, you are about to get a very large spike in volatility. So while I cannot guarantee this is going to happen, we need to see the VIX above 15 to tell us we are getting that spike in volatility, and then I would instantly expect a deeper pullback or correction as the VIX starts spiking out, and I do think the VIX is going to reach between 18 and 20. It may go higher than that, but we need that break above 15 to confirm it, and that will be the energy getting released from the VIX from coiling up in this tight range. And the VIX has been very suppressed for the majority of the year, and I think July could surprise a lot of people and catch them off guard if we see that correction this month. So pay attention to those critical levels I gave you on the indices, and pay attention to the VIX, because I think if you combine the price action with the VIX and you pay attention to these critical levels, you'll know exactly how to trade in the month of July, and you'll have very good risk reward setups. So as I said before, this is just a short update because I want you to be aware of these critical levels just in case the move starts happening this week. And we still do have 2 more trading days, so anything is possible. Don't forget to claim 50% off bank trade alerts or the Stocks Channel Discord for the month of July simply by entering the coupon code FREEDOM at checkout. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.